I want to show you guys how sometimes it could be dangerous to sell puts or cover calls, especially in stocks that have high volatility, just like HIMS does at the moment. I sold a put at $20, and as you can see, I got assigned. I have a total of 100 shares, which is about 8% of my portfolio, and I am currently down 337 bucks, which is about almost 17%. Now, of course, if we take a look at the overall performance of my portfolio in the past month, we are down about 0.22%, which is not crazy compared to how the stock market currently is. And this is because I have companies like CRM, Microsoft, and Amazon that have a lot of volatility as well, but that's beside the point. Now, as you can see here, around February 4th, I sold a put of $20 on HIMS stock, giving me a premium or a credit of about $14 per contract. I only had one contract equals 100 shares, so I got 14 bucks. Now, I saw all the news that NVO was suing HIMS, and then I started to get a little worried, but I was like, okay, I don't really mind owning HIMS at $20, but things seem to be a little bit worse than they are, so I'm not sure if I want to keep this company, sell it at a $300 loss, or keep it and sell cover costs, which is another thing that we're going to go over in this video. Now, if you see here, I canceled a few orders, and this isn't me canceling the stock. I was trying to roll over the stock, but since it had so much volatility and it was close to a Friday, the market was being close to being closed already, so the credit or the spread was very high, so I might have to end up losing some money just to roll it over, and I really didn't want to do that because I think a $20 share price for HIMS is nothing crazy, and I think I can handle it. So at the end, I got assigned the 100 shares, which is about a $2,000 investment. Again, nothing too crazy. Yes, it's 8% of my portfolio, but I have a small portfolio, and I think HIMS will overcome this, or at least I think the $20 share price is nothing crazy for HIMS, and once it gets back up to the price, I might just sell it, but for now, I'm going to start selling covered calls. Now, I have another sell option on SoFi stock that I got a credit of $10, which expires this week on the 20th, and I'm selling SoFi at a strike price of 18 bucks. So SoFi, if it goes below 18 bucks, I'm gonna get assigned these shares as well. SoFi is a company that I believe a little bit more in. It's a little bit safer, so I really don't mind getting assigned this. I'm just gonna keep on selling cover calls, and I bought, which means I close a SoFi option around here that I got a credit of 1 as well. So the plan with him stock is gonna be to sell covered call options. So how do you do that? You pretty much go here on the right hand side where it says trade options. Of course, the market is closed right now, so I can't really do it. I'm gonna pick an expiration date a little bit farther out than February 20th, so we could do the 27th or March 6th. I think a couple weeks afterwards a little bit better. So I'm gonna do a strike price of about, oh, you gotta go sell call, and then I'd say I do a strike price of about 20 bucks, maybe 20.5 to have a little bit of a premium. But since my cost basis is below the $20, I think I could go ahead and do the $20 mark. You go ahead and add this, you would pretty much get a $73 credit for doing this call. Of course, this is not going to be accurate. The market is closed. Monday, it was President's Day, so we got to wait until today, Tuesday, which is the day I'm recording this video, for the market open and see what the new premiums are. But basically, this is what I want to do for now. Just solve it just as much as I can in HIMS stock. I have 100 shares, maybe sell some when it gets to about the $18 mark. I don't know. I don't want to do that because I want to keep selling calls. I can also pick an expiration date even farther out, and then I'll get a lot more credit if I do the $20 hit mark. Again, you got to keep in mind, like I said, I have to wait for the market to open and see what the spread is going to be, which I don't know what that is now. This is the current SoFi put that I have that I showed you before, the $18 strike price that expires this week on a Friday, which is the 20th. As you can see, the current price for SoFi is $19.38. So if by the 20th SoFi is below $18, I'm going to get assigned 100 shares, and then once again we're going to rinse and repeat, and we're going to sell cover costs on this as well, and then that way make a little bit of a premium. And then here I'm going to try and show you guys how much I've made so far selling puts. It's nothing crazy. It's actually going to show negative because I got assigned the HIMS puts, but if I click on the year to date of my portfolio just selling puts without counting the fact that I got assigned the HIMS put, which puts me at a negative 2,000, but it's really not negative because I own the shares. I'm overall up year to date $26, and I know it's nothing crazy, guys, and I wish I could show you because I have it on my phone, but I've only done 1 2 3 4 5 puts. Okay, out of 5 puts I made a total profit of $26, and I'm gonna continue doing this throughout the years, and it's gonna be a lot more when I sell more contracts also. And I've been investing heavy a lot, so that's why I have less capital to sell more puts, hence why it's so low. I know it's nothing crazy, but over time it does add up. If you enjoyed the video, please consider leaving a like. Don't forget to subscribe, and as always, I'll see you on the next video.